If you have seen any of this platform, Coinbase, DraftKings, Roblox, Twitch, or YouTube, chances are you have probably come across PaySafe at some point in time without realizing it. Today I'll be covering PaySafe, a FinTech, and the biggest SPAC to date with a valuation of $9 billion. So let's go ahead and talk about why this stock is so popular right now, what are some risks in buying this stock, and if it's a good idea to buy it right now, then I'll let you come into your own conclusion. That way you will know if this stock deserves a place in your portfolio. Alright, before I get into it, to those who just discovered my channel, this is Xratios Investor. I've covered stocks for years and shared some hidden gems in my channel like NEO at $4, Plug Power, Canopy, Virgin Galactic, and Desktop Metal at $10. Also, disclaimer, if you are seeing my video, likely it's because I'm bullish on the stock, or else I couldn't be bothered to make a video because I think it's not just gonna waste my time, but also your time. And don't forget to sign up with Weibo if you haven't already under the link provided below and get 4 free stocks from one of your favorite companies, 2 free stocks each valued between $2.50 to $250, and another 2 free stocks each valued between $8 and $1,600 after you deposit $100. So let's get started. For those of you that have zero idea, PaySafe is an integrated payment platform with a two-sided consumer and merchant network processing of over $100 billion in transactional volume. The company's core purpose is to enable businesses and consumers around the world to connect and transact seamlessly through payment processing, digital wallet, and online cash solution. A few payment platforms with similar functionality that immediately come into mind are Square and PayPal. This means that when it comes to the payment platform competition, PaySafe is not quite exactly in the best position compared to its peers, because if you pay attention at the numbers in terms of revenue in 2020, PaySafe is at $1.5 billion compared to PayPal at $21 billion and Square at $9.3 billion. On the surface level, it's easy to recognize the fact that PaySafe is not even close to what Square and PayPal are making in terms of revenue or even market share. However, as I dig deeper into PaySafe, what I found next really blew my mind. So here's what's going on. Whether people realize it or not, iGaming, also known as online sports betting and gambling, are digitizing thanks to the shifting legalization as well as the huge push from casino operators in expanding online gambling platform as a result from the coronavirus pandemic. Because of that, we are witnessing a huge shift in demand and supply towards the online iGaming trend. According to research, the global online gambling market could be worth up to $92.9 billion by 2023 from $59 billion today. In the US iGaming market alone, we are talking about a compound annual growth rate of 52%, with iGaming deposit volume growing from $3.4 billion in 2019 to $24 billion by 2025. And as the iGaming trend continues to grow, PaySafe is and will remain a leader in this new industry, because guess what? PaySafe already holds number 1 position in the iGaming eCash network segment with over 60 customers for this segment that includes big names like Fortnite, Twitch, and Spotify. PaySafe also holds the number 2 market share position in the global digital wallet market with over 120 market and customer including DraftKings, Bet365, and others. So not only will PaySafe continue to reap benefit from this massive trend, but also remain at the top as the market leader with its rapidly expanding network segment in this regard. Now, with the iGaming industry growing as big as this, that then raises the question, why isn't PayPal or Square in the equation for this market? Well, the difference lies in the way they work. The way PayPal work is by making sure its users really do lock down their personal information. But unlike PayPal, the fundamental foundation lying behind PaySafe is that PaySafe offers solutions for both offline and online transaction without demanding your intrusive information. Just imagine if you enter a gambling website, 9 out of 10 times you will have to provide your banking information in the form of credit card or debit card. But with PaySafe in gambling sites, for example, you can remain anonymous and will not need to provide any personal or banking information using a PaySafe card. As for Square, they are looking at cryptocurrency to offer a way for people to keep your personal information safe. And that's what makes PaySafe relevant in the market today and the exact reason why BFT Stock is so popular right now. Now, so far we have only covered 50% of PaySafe's organic revenue. So let's go ahead and talk about the other half of PaySafe's organic revenue. The way PaySafe generates the other 50% of its organic revenue is through integrated processing. In other words, we are looking at a full stack of PaySafe integrated commerce solutions, enabling businesses to accept payment online and in-store, ranging from e-commerce, integrated software, point of sale scaled for small and medium businesses. That means that every single time a new business entity like you sells goods or services to consumers, the merchant has a contract with an acquiring bank or merchant processor to accept card payments, meaning that PaySafe operates behind the scene in apps that we use on a daily basis to accept payments. In DraftKings, for example, when you end up paying, PaySafe is working behind the scene there to improve the online gambling and cash out experience. PaySafe also has other big names in different industries such as MindBody, Power, and the most recent one being MLCo. If you are wondering why does this sound so familiar, that's because PayPal and Stripe are pretty much in the race with massive market share except for companies that have anything that involves iGaming. But essentially that's why the legendary Bill Foley is here with his 32 over years of industry experience delivering stockholders value with a principal background in financial and technology sector experience to help see the growth and eat part of PayPal and Stripe market share in the other industry that's not iGaming through the M&A strategy. Overall, I think PaySafe has a very interesting business model, and in my opinion, anywhere below $15 is a steal because I see iGaming as the future, and that's exactly where PaySafe is aligning their future at. After all, when I think about it and ask myself if PaySafe can remain relevant in the market for the next 10 years, honestly, I can definitely see it not just because of its interesting competitive advantage in the iGaming space, but also Bill Foley's experience in pushing PaySafe into a winner in the other half of the 50% in integrated processing. Before I end this video, I just want to remind you guys that like any other stock, there are indeed risks. The risks are 1. Legalization. If you have ever entered a position with a stock that deals with legalization in the past, it's pretty much a hassle to deal with. 2. Bill Foley's M&A strategy must be on point in order to remain competitive in the race. 3. PaySafe projected numbers are based on assumption of further legalization of iGaming in all states. And like I said before, legalization is a pain to deal with just because of the process and delays. That's all I have for this video. Please hit the thumbs up button so that this video can reach to a brand new audience. Also remember to subscribe for new future video if you want to learn and watch more on my elaborated research. Hope you guys find this video completely different from any PaySafe videos you have seen before. So be sure to share this video to help this channel grow. Till next time.